morning, everybody. Welcome. Thanks for joining us early this morning. This is our second quarterly investor briefing. We're going to keep doing these every quarter. Those of you who joined us the first time, you heard this, but I'll reiterate. We just want to give you a half an hour on what's the latest going on in the market. We'll bring different speakers to you on different subjects. We're open to suggestions. We're open to volunteers from our investor base too, to speak to this group. So I'm just going to jump right in with a couple of quick Mish Auto updates, and then we have a special guest from Wards this morning that's going to join us to take us through a market update. So Lori, I'll let you advance. So again, I want to touch on a couple of updates for you in our four critical areas. Our areas that we're focused on at Mish Auto, and some of you are involved in our branding process and our update to our messaging: talent, advocacy, industry transition, and economic development. Our speaker, Adam, today is going to talk a lot about the industry transition. So I just want to give you a couple of updates on advocacy and talent. First of all, we've been busy in this area. Paul Corbett, who many of you know is our Director of Government Affairs. In September, we had Representative Jason Morgan in to meet with our advocacy committee. That was a really good session. I appreciate Rep. Morgan coming to join us. Paul just recently took a group of legislators to tour ADAC's Muskegon facilities. So that's good. We try to do this on a regular basis to get the legislators into your R&D facilities, into your manufacturing facilities. So that was a good event also. Kind of a big announcement for us. Most of you should be receiving, and if you're not receiving, let Lauren or myself or somebody from our team know. You should get our bi-weekly Mish Auto Insider, but in the next week or so, we're going to launch an Advocacy Insider too. And this will be focused on government affairs issues, policy issues, actions of the advocacy committee. But if you are interested in that, you'll see that, an invite to that coming soon, and you can opt into that additional newsletter. We heard from you. We felt that was important to add, so we're doing that. Paul and all of us are leading really three key areas of legislation and policy that we're working on right now. Number one, and I know this is of interest to many of you, is the R&D tax credit. We're getting close. We're not there yet. Obviously, the legislature is very tied up with the election, but that is something that we hope gets to the governor's desk by the end of the year. Also, a bit controversial, but also something that we're in the middle of is what evolves from the economic development or SOAR package from the strategic outreach funding for incentives for new facilities, for facilities that want to expand here in Michigan. And then lastly, and I won't go into a lot of detail, but we're really watching some legislation on data privacy bills too. A lot going on in the advocacy world. Just want to make sure that you're aware of some of these things. If you have any questions or comments about advocacy, please reach out to us directly. And then the second thing I wanted to talk about was a really important activity in our talent space. Most of you are very engaged with this, but our focus with talent is promote the industry, retain the talent that we're growing here. Yes, attract new talent, but really retain the talent that we're growing here in Michigan and grow that pipeline for your companies. Specific to that, go ahead, Lori, is a project that you may or may not have heard about, but I wanted to talk about it real briefly. This is the U-Drive project. We don't call it a campaign. It's not a social media campaign. This is a project which we tested last year, and we are now growing. We've been growing throughout this year. We're going to grow over the next couple of years. It is social media based, primarily on TikTok, Instagram, and YouTube. And this is about 15, 16 young professionals from different companies, some university students, and they are the creators of the content. So we're asking them to share, where do they work? Where are they living? How are they enjoying living in Michigan? What are they doing? What's their career path? It's really taken off. It's something that we're very proud of, but we also think it's very important to change the perceptions of industries, drive talent into the industry. And again, it's focused on growing our own and keeping our own. So there is a link, and when you get this deck, it'll be sent out to you. There's a link on the bottom here, but you can go to U-Drive and you can find that on the Mish Auto website too. But you're going to hear more about this platform. Our talent team at Mish-Auto is working on this, but I wanted you to be aware of it this morning. That's it. That's the Mish-Auto update this morning. We're going to jump into, and I want to welcome and thank Adam Ragazzino from the long title here, but the Batteries and e-Powertrains Informa Tech Group from Ward's Auto. We're fortunate. We've had a couple calls with Adam to talk about the market. And there is so much going on. There's so many dynamics right now that we said, let's have Adam come in and give us an update on this. This deck will be available to you, will be sent out to all the attendees. And so if you have any questions or comments, Adam's information is going to be in the deck. We're not going to do Q&A on this session. I'm going to give Adam the rest of the session here today to talk about the market. Adam, thanks for joining us today.
Morning, Glenn. Thanks for having me on the show today. And you're right, there is a lot going on. And I like to start off with a little preamble about my presentation. Let me just pull it up here and start sharing it with you guys so you can see it here. There we go. And it should be pulling up any second here. There we go. You can see that okay?
Yes.
Great. So before I did this presentation for the first time, I was talking to a researcher. I'm out here in Colorado, and I was talking to someone at one of the national labs here, and we were talking about, doing a supply chain, a domestic supply chain, getting all the batteries, raw materials, and electric vehicle components together without China. And as we're talking, the researcher remarked, it's not a competition, this person had said, and I agree with them that, at the individual level, Americans and Chinese are not competing, but, corporations by their nature very much are. So when I talk about winning the EV race, I like to underscore the idea that I am talking about corporations and not about, individuals. So, but with that, there's a lot to cover here, so I think we can just jump right in. So by now, everyone has probably seen the news, right? Ford pushing back on their EV targets, EV sales flatlining, Volkswagen walks back their targets, Volvo walks back their targets, General Motors follows suit. And then I bet you've also seen by now these headlines, right? Where sales are soaring, electric car sales rising, China is becoming the first nation to sell 1 million EVs. The death of electric vehicles is exaggerated. And it's prompted one journalist from Electric to ask, which is it already? Is EV demand slowing or growing? So I like to start with answering that question first. Is the EV market slowing down? And in short, it's no, not exactly. But it also really depends where you're looking to. The rate of growth is actually slowing, and that's normal for any industry. But plug-in EVs, and there's gonna be a lot of abbreviation here, so PEVs, if you see it on the screen, are plug-in electric vehicles, and that includes battery electrics, plug-in hybrid electrics, and something that's less popular, which are the extended range electric vehicles, which is essentially a battery electric vehicle with a small generator. But anyway, they're still selling, and their share continues to rise. And as you can see here, the world sales share percentage of ICE versus plug-in electric, Ward sees plug-in electrics overtaking share of ICE-only vehicles just around 2030. So sales are still climbing. And when we talk about sales climbing, and I had mentioned that, it depends where you look. I'm going to pull up my laser pointer here for a second. The yellow lines are, the dark yellow's ICE, and the light yellow are plug-in electrics, and this represents the Chinese market. And we see plug-in electrics overtaking ICE in China quite soon, right, by about the end of this year. And then the blue lines here are Europe, and again, plug-in electrics in Europe overtaking ICE by the end of next year. And then the red lines here are the US, and way out here, around 2030, we see that happening. So different regions growing at different rates, but very much still positive trends here as we move forward. Switch back to my cursor. And if we break it down by the power types, right, we see ICE sales leveled off and even climbed a bit last year. That's the black line here, which I'll point out is on the tens of millions scale on the left here. So really still, a tremendous volume with ICE vehicles still. Pure BEVs, pure battery electrics, that's the dark green line here. They're continuing to outsell other electric powertrains and moving past on a quarterly basis some of the ICE sales last year. And again, this year, we anticipate it overtaking again by next year. And then let me switch to my my laser pointer. Our plug-in hybrids and full hybrids, they're taking off as well. They're doing quite well too. So not as fast as BEVs, but still growing. And one I want to point out, the blue line here, this is the extended range electric vehicles, which don't seem to be taking off, but there's been a lot more interest from companies recently. Ford, Stellantis, and BMW in particular have mentioned that this is a powertrain that they're interested in. I think that's important. We'll come back to it. And now this is where I think we get caught up. This is world sales growth, right? The rate of growth. And you can see at the start, sales growth for electric vehicles really steep, right? Really taking off quite quickly. And then kind of peters out a bit, right? And I think this is what caught the OEMs by surprise, is that they had ramped up quickly and anticipated a lot of growth to continue. It didn't materialize. They kind of, their eyes were bigger than their production wallets. So the rate of growth is slowing, but it's still growing. ICE vehicles were even growing for a while, but we anticipate by next year, the rate of growth will be decreasing where, it's actually negative and it's losing sales each year. Now looking at sales volume at the sales group level for plug-in electric vehicles, the yellow line here is BYD, the Chinese electric vehicle company, overwhelmingly positive growth outlook for BYD. And Wards expects improvements through the end of the year for other top global plug-in electric vehicle makers. And I would point out, keep an eye on this gray line here. This is Geely, another Chinese automaker. They own Volvo and Polestar. They may actually overtake Tesla, the red line here, by next year. So really watch for Geely in the coming quarters. Now, when we switch over to hybrid powertrains, a very different picture. And I apologize for the lack of color, because yellow here is now Toyota and not BYD. And you see Toyota really head and shoulders above the rest of the pack here. Mercedes and Hyundai are second in line, but quite tight into the rest of the pack of OEMs. And I would again point out one potential rising star is Stellantis here. And given their recent cuts for their financial guidance, they sure could use the improvement. And let's keep in mind the reasons Stellantis had cited for some of their expected poor performance was competition from Chinese OEMs, because that leads us into our next set of headlines and topic. And I'm sure everyone has seen this, right? Global domination by Chinese OEMs. All right, the US, the Chinese automakers are taking over. The US hasn't even noticed, taking the world by storm. Right, and China poses a threat to the US, to the auto industry. And so, is that really true? Are Chinese companies really taking over the auto industry? And maybe that seems obvious, but I think there's a lot of nuance there to go into. And again, the answer, I think, it really depends where you're looking. So this is ICE and hybrid vehicles sales share percentages. And for ICE and hybrids, Japanese and European automakers, the red and blue lines up here, still head and shoulders above the pack. Yellow is the Chinese automakers, and growing, right, increasing their global share, and US and South Korean automakers here, slightly negative if holding steady. What I think is interesting about this slide is Chinese OEMs are grabbing more percentage share, but not necessarily at anyone's expense. And I think that's interesting because it kind of suggests that they're pulling in new customers. And I think that's important as we move forward in the presentation. We'll keep talking about that. So now just looking at plug-in electric vehicles sales share, look at the growth rate on the Chinese OEMs, really tremendous growth here, taking sales share. And this is very much at other OEMs' expense. This is European and US OEMs negatively inclined there. And South Korean and Japanese kind of running steady, but at much lower percentages. And we break that down by regions. And I realize this is small, but what I wanted to show was sort of the effect over time. And you can see in China, Chinese OEMs clearly outselling everyone else with plug-in electric vehicles, and the US OEMs in China losing, Europe also losing. In Europe, where kind of the alarm about Chinese OEMs moving in and taking over has been the loudest, European OEMs still the bulk of the domestic auto sales there. But you can see there's a slight trend, not even slight, there's a trend downward. Chinese OEMs here, very much gaining share, but at much lower volume. US kind of touch and go here, and Japan rising, and South Korea kind of holding steady. Now, in the US, this is broken out by trade region, so this is actually North America. In North America, US OEMs really losing share, and rapidly. And thanks to tariffs, the the Chinese vehicle makers really haven't made a dent in the US market, in the North American market. So all the worry about Chinese OEMs, the US is losing share without China really being an issue here. And it's Europe, Japan, South Korea are competitors that have been in the region for a long time that the US is really losing out to. And the other part of these global trends that I want to call attention to, as we look at the other regions in the ASEAN trading bloc in Asia, Chinese OEMs really doing well. The brands dominate there. Same thing over here in Mercosur in the South American trading bloc, Chinese OEMs really taking off. And what is also interesting is European brands in other Europe, in ASEAN, in Mercosur, really steep decline in sales there. US practically non-existent. US and ASEAN very low. In other parts of Asia, outside of ASEAN, outside of China, Europe, Japan, South Korea, really is the bulk of sales there, with Chinese OEMs gaining. But I really want to underscore loss of sales by the OEMs in these other regions and in their home region, while Chinese OEMs are gaining, really important to keep in mind, and we're going to talk about that again. It's important because as the legacy OEMs lose ground, they're really getting hemmed into their home markets and even losing share at home in some instances. And they're starting to really feel the pain of their excesses, whether it's their debt or corporate structure, where being too big has become a liabilities, and sustaining their old selves is something we're seeing is biting them right now. Volkswagen is at risk here as one of the largest employers, over 650,000 employees worldwide. And we've also seen in the news lately, Stellantis already feeling the pain with cutbacks. So this is probably the most important trend to keep in mind, as electrification moves forward. And I just want to I'm starting to wind down now, and I want to bring it back to North America. This is the top 10 sales groups in North America selling plug-in electric vehicles. And no surprise here, the red bars are Tesla, right? So no surprise they dominate. But they have been losing shares, you can see here. They're down 10% from 2022 quarter two. And what I think is interesting, it's not really any one other company that's taking share. It's just more of the fact that there's so much more choice that Tesla's really been losing out to consumer choice lately. Hyundai and Stellantis are very distant second and third. And we see Stellantis may rise up gain 4% by the after this year, by the end of this year. And while Tesla is the only U.S.-based firm dominating plug-in electric vehicle sales in North America, we saw this earlier, Korean, European, and Japanese brands that are really rounding out the top five with Ford in the fourth. So American brands aren't losing to China per se in North America. They're just losing. So it's understandable why the alarm went up so loudly about Chinese electric vehicle makers. U.S. automakers didn't need any more competition in the plug-in electric space, especially. Now let's move on to hybrids. We see a different story again. Yellow here is Toyota again, really dominating the field. But again, European brands, Japanese brands dominate North America. Ford's down here, and I'm not even sure GM made the list here for the top 10 in the hybrids. And now one more change. When we bring ICE back into the mix, right, it's a much more split field. And we see GM, Ford back into the mix, Toyota running second here. So Detroit's still dominating in the ICE sales, which is good. They're going to need those to pay for their transition to electric. But as we see on the next slide, that gets more difficult. And I realize this is small, but I like to show the effective time and scale. So this is the power types and how they're changing over time. In Europe, in the EU, ICE declining rapidly here. Battery electrics, dominant electrical choice and increasing. 48-volt mild hybrids really taking off. Plug-in electric, plug-in hybrids less so. In China, here, ICE is losing out rapidly. Not too rapidly, but not as rapid as Europe, but it's declining. And we see BEVs gaining quite rapidly as opposed to all the other electrification forms. While here in the US, ICE is still very much part of the market, over 70% of the share of the market. Battery electric and full hybrids, they're gaining share steadily, but still represent a very low percentage of the market. So who's winning, right? When it comes to plug-in electric vehicles, Chinese automakers are doing quite well globally, but it still does depend where you're standing. And so to wrap up, as we look at the global markets, we see some worrying trends, and especially for the legacies, as opposed to Tesla. The Chinese OEMs in Europe, still at low volumes compared to the domestic OEMs, are gaining share, especially in electric vehicles. And this is very much at the expense of legacy American and European brands. In China, the largest market, I'll remind you, US and EU brands are really lagging behind their domestic counterpoints, which is normal. But for the US and EU companies, they've also lost their cachet with Chinese consumers, and that's a more difficult thing to fix. Here in the US, tariffs have kept Chinese OEMs out, but US plug-in electric vehicles are really losing market share to everyone else. And in other markets, as we looked at ASEAN and South America, we see Chinese OEMs are taking market share in South America and the other parts of Asia. And it's not just there in EVs. Chinese-made ICE vehicles as well are gaining share in China and other parts of Europe. And that combined effect of losing market share in 2 of 3 major markets, China and Europe, and in the case of US automakers, losing share at home, and then having Chinese OEMs fill in the gaps, in the minor markets around the world, is really restricting American and European automakers to just their home territories. So companies that have been getting by despite high debt costs like Ford or enormous corporate structures like Volkswagen are really feeling the weight of that excess. But I think the real story here and the real threat to US automakers, Detroit especially, less so for Tesla, is that they really let themselves get uncompetitive, just as the world was changing. And again, I think this is a difficult hole to climb out of. And I want to end with something that Carlos Tavares, the CEO of Stellantis, said recently on a CNBC interview. He said he sees the auto industry undergoing a major consolidation in the next 5 to 10 years, with possibly only 5 global automakers left on a standing. And I can't say whether 5 is the right number or not, but the trends we're seeing now are exactly what leads to this sort of contraction. And so with that, thank you. And if anyone's at the battery show in Detroit next week, please come see me, and I'd be happy to talk with you more about this stuff. And I'm going to stop sharing.
Adam, thank you. Will Wards have a booth exhibit at the battery show?
We usually do. I know several of the Wards analysts will be presenting.
Right.
I stop sharing. And yeah, I really like getting to see people at the show and talking with people at the show and answering questions. So if people are there, it'd be great to chat.
Okay. Well, first of all, thank you for taking the time, and thank you for walking through the detail behind, I think, what we're all feeling and seeing. Thank you for your time, but also thank you to Wards. For those on the call, Wards is also an investor in Machado and supporter of Machado, so we thank the Wards team for doing that. Lori and Lauren and team, thank you for setting this up. We will send a deck out. Adam's contact information is in that. We want to be respectful of your time and keep to our half hour this morning. But I think I'll pick something that you said to kind of leave us with. The sky isn't falling, but the world is changing. And what you said is sustaining our old selves is not an option. And I think that's just the way we need to look at it. We need to move. We need to move fast. We need to change, not just the legacy companies. And I'm sure there are some on here. They are the home team to us. Machado's mission is to protect, retain, and grow this industry. And we take it very seriously on behalf of all of you. So thanks for the time today, everybody. Adam, thanks for your time. And everybody have a great day. Thanks.
Thanks, Glenn. Thanks for having me.
You got it.